10 stocks to watch right now, baby. What is happening, investors? It is your boy Jack. I am not a financial advisor. Look, I got the hoodie to prove that fact. But today we're going to speak about some stocks, baby. I do a video like this every single weekend. I'm going to bring you guys through 10 juicy companies, most of which I own, some of which I'm watching and waiting to get an entry point into. Now, if you saw yesterday's video I put up right here, I explained that I am in 60% cash as of this moment in time. I have not been buying a lot of stocks, and that has given me more time to do more research into some of my favorite companies and decide exactly where and when I want to buy more of them. Now, in today's video, I'm going to briefly run through each of the companies. Obviously, there's 10 of them. We can't spend too much time on each. I do have full analysis on the channel on most of these, so if you want them, just look them up. I'm going to give you guys some price ranges that I personally would like to buy more of these companies at. I'm going to give you guys my time frame for each of these companies, so you have a better understanding of whether I plan on holding them for 2 or 3 years or 15, 20 years. And I'm also going to give you the risk factor I have for each of these companies. Do I think it's low risk or do I think it's high risk in the short and long term? So with that being said, my friends, can I please ask you to hit that juicy like button nice and early? It really helps me out. If you're new around here or you've watched a couple of videos, please do me a massive favor. Hit that juicy red subscribe button and join the family. We're trying so hard to get to 50,000 subs. And I'd love if you would drop me a comment down below. Let me know a couple of stocks that you're watching. I'm always interested. I'm always down in that comment section interacting with you guys. With that being said, let's just get straight into the first company of the day. So we are started off with a SPAC. Now, the SPAC itself is SPCE. The company we're speaking about and the company they will be merging with is Chargepoint, that you are seeing on the screen right in front of you, and they say it right here on their website. Electric mobility is here, our passion making it easy. Essentially, they provide chargers for electric vehicles. Now, if you've been on this channel for more than 2 minutes, you should already know I love EV. It is the biggest portion of my portfolio. I do currently own a position in this company. Now, I opened up a feeler position. It was 100 shares at about $13.93 a share. So that's where I stand with these guys as of right now. You can see that currently we're at about $15.61 a share. So not too much has happened, okay? Now, we only found out about this, back the 15th of September, about 6 weeks ago. Not the most has happened. There's been some price action, some ups, some downs. Overall, they're up about 50%. So, it's done well. For a SPAC, it's not gone insane, but it's done well. So why do I like these guys? Okay, well, look at this. Electric vehicle charging infrastructure market is to grow at a compound annual growth rate of 36.3% from 2020 all the way up till 2028. And simply put, these guys are the biggest players. So the fact that they are going public is exciting to me, somebody who already loves EV as it stands. They are proven, they've been around a long time, they provided a lot of charges, they have a whole lot of chargers, they seem like an awesome company. So prices I'd like to buy these guys at. Now, I explained in yesterday's video, I haven't been buying a lot lately. I am literally at 60% cash, which for me is too much. I don't want that much cash. At current prices of $15.61, I'd be happy to buy in all honesty. I mean, I'm not going to be upset if I end up buying more at $15.60 or $14 or $16.50, you know, in the grand scheme of things, it's not too important. Now, the time frame I have for a company like this, it's quite a broad time frame. I would say minimum 3 years, but that could go all the way up to 15 plus years. It depends how well the company performs over the next few years personally. As I just showed you, this is a massive industry that is shown to grow very quickly over the next decade or so. So of course, if they keep up with the times, if they keep growing at that rate, I'm going to have no interest in selling these guys in 6 months or a year's time. Now, with that being said, the risk factor, how risky do I think these guys are? I'd pretty much call them a 5 out of 10. They definitely carry their fair share of risk. The biggest reason is right now, they're a SPAC, and we all know what can happen with SPACs in the short term at the very least. They can be driven up in price like crazy. We've seen mergers go through, the stock sell off very quickly. Swing traders, short term investors run off with their profits. There is people in here who've already made 50%. A lot of people will be up 25-ish%. So in the short term, I'd rate them a 5 out of 10. But in the longer term, I do think this is a relatively safe bet. I think the odds of you not making considerable money within 2 to 3 years is very low, so in a longer time frame, I'd probably have the risk factor more so a 3 out of 10. With that being said, there is of course competition. You have to watch Plug Power, you have to watch Tesla, but that's about where I would rate these guys. Oh guys, Multiplan stock. I think this is literally the worst performing stock in my portfolio right now. I have 150 shares and I'm down over 30%. That is horrific. Now, I have not bought more since I initially bought. I bought around 11.35 or so, I believe. It's been horrible. I mean, it well and truly has been. Now, if you remember me speaking about these guys for the first time, I always said they're not very exciting, and I did definitely think it was a longer term investment. I didn't think we were going to see the same hype as a lot of other SPACs did, but with that being said, I never thought we were going to get this low, but we don't really show any signs of speeding up anytime soon. I get asked about these guys a whole lot lately, and I understand why. I mean, I told you guys I bought them up here and they have dipped off over 30% since. I understand. I am holding. I am contemplating buying more for the reasons I spoke about in the past. So I mean, Multiplan has a market cap of about $5.15 billion as of this moment in time. And our 2021 estimated revenue is over $1.1 billion. That's just 2021 estimated revenue with a market cap of $5 billion. I mean, adjusted EBITDA of nearly $1 billion, guys. And our 2021 valuation is sitting at $11 billion. Our 2016 valuation, $7.5 billion. 2014 was $4.4 billion for a market cap that currently has a valuation of $5.15 billion. These guys have grown very nicely. I mean, we've grown 11 times what we were back in 2006 as of next year, potentially. It's not exciting, but I still really like the look of this company, and that's why I am holding them. And I think, you know, maybe I should have sold out, but I did not see this happening. Thankfully, it's not a very big position for me. I know it's 150 shares. It's a little bit of money, but it was my feeler position. It was my starter position. And there was a stage where I was contemplating selling out at about $9. So I would have sold out right about here on this day. And on that day, I made a decision. You know what? I'm going to hold these guys for better or worse. As part of being a long-term investor, sometimes you're going to make bad decisions, whether they're in the short term or the long term. This was definitely a poor decision in the short term. It is what it is. So price hike is right, be happy to buy more. This is a very difficult one for me to answer because I think we are very undervalued from a long-term point of view as it is. So maybe I would be happy to buy here. I mean, considering only a month and a half ago or so, I was buying in the $11 ranges. You would have to think that I'd be happy at $7.70. It's not so much a price target I have right now. I just want to see us start going up. You know, especially with all of the uncertainty in the market, I want to take my time here. I may well buy more at these prices. I may well wait a little while longer. That could mean I get in a bit cheaper or a bit more expensive. I'm not going to be too worried either way. Now, my time frame with this company has always been long. If you go back and watch my first video on these guys, I said I saw these guys as a long-term investment. And if I show you that investor presentation yet again, look at the growth over the years. It can be slow increments. It can be 4 or 5 years before considerable growth. But I think if you're willing to hold these guys for 5, 10, 15 plus years, you're probably going to make decent money. And that's why I decided to just hold these guys. So that is my time frame. Definitely a long-term investment. And the risk factor at current prices, I still think is low. I genuinely think it's very low. When we were $10, $11, I thought the risk factor was quite low. We were trading at relatively low multiples. I would again put it in the 3s maybe. 3 out of 10 on that risk factor scale. I think it's quite safe from a long-term point of view. Again, I want to stress that in the short term, I'm not going to try and make any calls on this. Anything can happen. The market doesn't have to make sense. That's the second company of today. Okay, baby, one I spoke about somewhat recently. I don't think I have a full video on these guys. And this is a company that I don't actually own yet. But if I bring you to that 6-month chart, these guys were experiencing some really nice growth, up 400% in a span of just over 5 months. But we have fallen over 40% in value since only the 13th of October. It has been terrible. Now, a lot of you guys will probably be aware of who Fastly are. They're an American cloud computing service provider. A lot of YouTubers spoke about these guys. A lot of guys think these are a fantastic growth stock, and I will not disagree. But if we go back to here, we had gone on this amazing run. We were sitting around the $80 mark. There was a lot of sideways trading for a very considerable period of time. Then they went on this really nice run, but that really nice one was followed by that massive sell-off. Now we're actually below prices we were when we finished that first really nice run that lasted a couple of months. But I suppose now the question is, do I think this is good enough value for a long-term investment? Again, I'm not trying to time these guys short-term. So there was recently an analyst here. A lot of people have probably spoken about this already. Piper Sandler, James Fish, lowered his 12-month price target on Fastly from $84 to $65 on Friday. Now, I've seen analysts both for and against this company. Cloud computing has been very volatile. It's moved somewhat similar to EV in a lot of ways. Now, this is one of the companies and one of the sectors that I think could benefit from this potential second lockdown or from a lot more people working from home. I think they offer a lot of fantastic services. What are my price targets, okay? I think I would be incredibly happy to buy these guys if we fell below $65 a share. Now, I don't necessarily see that happening, I will tell you that. But that is where I would be very happy to buy. Keep in mind, that's only bringing us back to kind of, you know, towards the end of June levels. It's not even anything crazy. I think that the large majority of people would have thought a correction was necessary once this run-up happened. But the question, I suppose, is this an overcorrection and therefore a good buying opportunity? This is one of the companies I'm not going to be upset if I get left behind, but I'm not going to buy unless I'm really confident doing so. Risk factor, I have to say I do see it having considerable risk. There are a lot of companies in this space as of right now. Short term, I mean, the risk is really high. And I'm going to say say that for all of my EV plays as well. Longer term, you know, it's a little bit higher risk than the others I've spoken about so far, I believe. I'd probably put it right there at a 5 or 6, but with that being said, I think the growth potential this has is absolutely immense. Heavily comparable to a lot of the startup EV companies. Currently at a market cap of 8 billion. I mean, I'm sure a lot of people would agree with me. I think these could easily double, triple, or even quadruple over the next 5 to 10 years, if not much more than that. So that's where I stand with FSLY. Now, next up, I want to speak about a company called Sunrun. Now, disclaimer, I'm not the most knowledgeable in the solar industry whatsoever. I have been studying it more and more lately, and I want to be very confident in my knowledge here. I don't know enough yet to give, you know, decent opinions. I'll just say it from the start. I've looked into quite a few companies. I do really like the look of this one in particular. It's a company called Sunrun. A lot of you probably are familiar with them. On the 6-month chart, absolutely beautiful. Another company who was up pretty much 500% before a sell-off of pretty much 30%, which, you know, in growth stocks right now is somewhat average. We've seen it in a lot of other industries as well. I know we haven't seen it with our dividend plays, S&P stocks, but even take a look at Apple, Facebook. I mean, we're seeing 10-15% dips right now. So something like this for a stock that's already up 500% isn't it insane? Now, Sunrun is a United States-based provider of residential solar electricity. Now, that's one of the big reasons I really like these guys, that they're residential. I think there is going to be more benefits to having solar panels installed in your house as the years go on. I think there's going to be more government incentives also. And these guys, as I say it right here, they are the #1 residential solar panel company in the US, which is obviously massive. But I think for somebody who's so involved in EV and clean energy in general, it makes sense for me to take an interest in solar energy going forwards. And this is their impact report from 2019. And we can see Sunrun has generated more than 7 billion kilowatt hours of clean energy since 2007 and prevented 5.2 million tons of CO2 from entering the atmosphere. This is the equivalent of preventing carbon dioxide emissions from more than 5 billion pounds of coal or 586 million gallons of gasoline. So quite clearly, they have had this massive impact so far, and they are growing very quickly. They're the #1 player. It seems very interesting to me. I'm going to put it that way. So prices I'd like to buy at. Again, this is tough for me to answer because I want to do more research and I want to understand the industry and the company a little bit better before I invest. So I'm not going to necessarily give price targets. I'm just going to say I'm going to keep a very close eye on them, and I more than likely will make a full video on these guys soon. Risk factors from what I have seen so far, in the short term, quite high. Similarly to cloud-based, similarly to EV. From a long-term point of view, Sunrun, I think, is going to be quite safe. I'm going to probably give them a 3 or 4 out of 10 with massive growth potential. I mean, we're speaking hundreds and hundreds, if not thousands of percent growth potential in the decades to come. If I am to invest in a solar panel related company, it 100% is going to be a long-term investment. But I did just want to let you guys know about this. I want to let you guys know that I am looking into this new industry and it is very exciting to me. Okay, so I don't think I need to spend much time on this one. But Workhorse, baby. I have loads of full videos on this. That's what most of you guys know me for. Now, Workhorse is the biggest position in my portfolio. It currently takes up about 16 or 17% of my entire portfolio. I'll be the first one to tell you that is too much. So for me, price target wise, it's difficult to say because I'm in this weird predicament where it's already so much in my portfolio. What I will say, I bought more Workhorse, where if I go back here, I think it was here at $24 a share or so. So considering we're at $20.34, I think it goes without saying that from a long-term perspective, if you have the same outlook as me, I'd be fine buying at $20 a share if it wasn't already such a big position for me. So I'm just going to get straight into it. Prices I'd like to buy at. I mean, yeah, I'm very happy at $20 a share. Time frame for Workhorse. My time frame for Workhorse is anywhere from 2 years all the way up to 15, 20, 200 years. It depends what happens in the short term though. I think we all know why we're investing in this right now. It's because we're trying to get in before this huge catalyst that could be the USPS contract. If we are to get that contract, this most certainly is going to be a long-term hold for me. If we aren't to get that contract, I'm going to have to be a little bit smarter. I may just dollar cost average down. I may sell and look for a better entry point. It's very hard to say right now. Risk, short-term risk, 10 out of 10. I mean, I know it's my biggest position in my portfolio, but I'm just going to be honest. Short-term risk is insane here. Now, at $20 a share, I actually might be being too harsh. Because the thing is, guys, if Workhorse is to drop, it's going to be for one reason and one reason only. The USPS contract. And if you're up to date with that, if you have your Google alerts set up, if you're keeping up to date, you know, every single day, you're going to know when that happens, and you can just sell out. And the odds are, you're probably not going to lose more than 20-25%. If you are just a bag hold this though, regardless of the USPS announcement, you know, there definitely is a possibility Workhorse goes down, in my opinion, 35-40%. From a long-term point of view though, USPS contract or not, I think the risk factor comes down considerably. We've been hiring a lot more people. Yes, we're not necessarily the most proven company in the world right now. We're hiring a lot more. We've formed partnerships with Hitachi. The CEO and CFO have told us before they're speaking with every major retailer you can think of. They're working on new vehicles constantly. I think long term, it's nowhere near as risky. But it's very difficult to say because at these prices, if what we want to happen short term doesn't happen, then yeah, the risk goes up. But if I was to remake this video once the USPS contract was announced, and say for example we got 25% or 0% of the contract, we found out a price we were going to regulate at, then I would say the risk factor is much lower, probably 3, 4, maybe 5. But that's Workhorse, you know where I stand. Okay, let's stick with a few of our EV stocks for a moment or two. Diamond Peak Holdings, Lordstown Motors, my second biggest position in my portfolio. So I love these guys. I bought them the first day they went public. I got in at $11.80 a share, I believe it was. I've cost averaged up quite a lot. I think my cost basis is now $17, $18, so you know, I've made very little. So I just checked, my average cost is $17.31 a share, and I have 210 shares. See, I'm only up like, what, 4 or 5%? It is funny considering I was up over 100, but you can probably tell I'm still not upset. It's a long-term investment. So again, I won't spend much time going through them because I speak about them so often. But the first thing I want to say is that from a long-term point of view, I think these guys are going to capture a huge portion of the electric vehicle fleet market. A lot of people ask me about GM's new GMC Hummer. That is a completely different market, my friends, okay? The starting price is $112,000, more than twice what the Lordstown Motors endurance truck is going to be. Our target market, okay, is fleets. Now, of course, me, you, the everyday person can buy one if we want, but the target market is fleets. In the investor presentation, we saw the average order was for 300 plus vehicles. A fleet, simply put, is not going to spend more money than necessary on the vehicles. It doesn't make sense from a financial or business point of view. It really does not. The main competitor is probably Rivian, and maybe even Tesla down the line, but I still think Rivian's probably the biggest one. So where would I be happy to buy? I'm very heavily contemplating buying more right now. Okay, I really am. At $18.21 a share, I'd be happy to buy here. So the risk factor, I've been saying this for months. In the long term, I think this is a much safer investment than, say, Workhorse. We already have so many pre-orders. I still expect us to have over 60,000 by the end of the year. That's a lot of potential revenue. We have an absolutely enormous plant. I think it's going to be absolutely beautiful. So the risk factor for me long term is a lot lower than most EV. I'm honestly going to say 3 or 4 out of 10. Now short term, of course, anything can happen. But if you're worried about that, you know, this isn't really the channel for you. My time frame, definitely long, at least 5+ years. I could well see myself holding these guys 10-15 years though. Again, there's just one more EV company I want to speak about. That's Tesla. The share price is so close to 420.69. Elon Musk would have been so happy. So we all know who Tesla are. I mean, we all know the story. We all know they've done amazing the last 4 or 5 quarters. I'm not going to go into depth there. For months on the channel, I'd said I would buy heavily at $300. I bought a little bit at $340 after this last big dip right here. It's getting to a stage with me, guys. I think Tesla from a long-term point of view is such low risk. I mean, if you're one of the hold these guys 5-10 years, I think you're making good money if you buy at $420 a share. It's getting to a stage where I'm contemplating just starting to buy 2 or 3 shares of these guys a month, regardless of the cost. But if ever I do see us around that $300 mark, or even sub 300, that's where I really would buy a very considerable amount of shares, and Tesla could potentially become the biggest, at least one of the biggest positions in my portfolio. I have a position right now, it's quite small. I have 6 shares, I'm up about 20%. I do think that my future self would thank me for buying more of these guys on, you know, a bi-weekly or monthly basis, so I'm probably going to just start doing that. So risk, I think, is extremely low from a long-term perspective, but it is one of the most volatile companies that is out there. So if you can't handle that, then your risk is probably 10, because you may well end up selling on one of the dips. Another SPAC, baby. Let's speak about Momentus, who will be merging with the SPAC Stable Road Acquisition Corp, ticker symbol SRAC. Now, this is a company who has gotten me very excited as of late, and is probably the longest term hold I have in my entire portfolio. I could easily see myself holding these guys for decades to come. So right now we're trading at $10.40 a share, okay? These guys will be going public relatively soon. These guys are at the forefront of the new space economy. Now, I've explained in previous videos, I think that space is inevitable. I think commercializing space is inevitable. Earth isn't going to last forever. We're going to need more materials that we can only really get in space. So what these guys are doing right now is essentially last mile delivery in space. So a satellite goes up on a Falcon 9, okay? These guys bring it exactly where it needs to go. But down the line, there is so much more potential. I mean, who knows when space is really going to be commercialized? Who knows when it's going to be worth a lot of money? What I can tell you is expect to be worth over $1.4 trillion within the next decade. Now, this is a company founded May 28, 2019. They are most certainly in their infancy, but they are already working with massive names, and they have projects coming up every few months for the next 2 years. We have pro forma enterprise value of already $1.2 billion with a well-capitalized balance sheet. We have partnerships with SpaceX, Made in Space, Lockheed Martin, NASA. This company hasn't even been around for 2 years. They have done so much already. They're already working with all of these absolutely incredible companies. Look at all of these other companies we're working with. This is awesome. Absolutely awesome, okay? We have a strong backlog of $90 million in orders, okay? But under negotiation and conversations, we're looking at 1.1 billion, okay? 2027 estimated revenue over $4 billion. Now, we're speaking about space. We're speaking about an industry that, you know, is most certainly in its infancy. It is by no means, you know, set in stone whether it's going to perform well or not over the next 10, 20 years. So the space industry as a whole, I would put the risk factor quite high, but for this company, I genuinely think if you're willing to hold them for a very long time, more so than pretty much any other stocks, you're going to make a lot of money. Short term, anything can happen. I wouldn't be surprised if we go well below $10 a share. I said this in my private Discord group when I bought them. Long term though, I think we're looking at some disgusting growth opportunity with a relatively low risk. I'm going to put these guys like 2 or 3 out of 10 if you're willing to hold them long enough. Now that does not mean if they hit $7 or $8 a share that I was wrong. I literally just said I could see that happening. But if you hold these guys long enough, immense potential in my personal opinion. Now, where would I be happy to buy? This is the only company I've bought in a month, so quite clearly I'm very happy to buy at these price points. And that's where I stand on these guys. Now we have one more space company to go through. You guys already know who this is. Looking at Virgin Galactic, okay? So again, these guys are commercializing space, but a little bit differently. These guys are literally just going to bring people up to space, to have a look around, you know? So it's different altogether. Now we're currently sitting at 19.14 a share. The monthly chart is very interesting. A month ago we were 16.43. We went up 40% all the way up to the 23s before selling off quite considerably, over 15%. Now I've actually been buying these guys a long time. I got in these guys initially probably back here somewhere. Maybe it was April, May, I'm not sure. So I lived through this first massive run to the upside. I lived through this massive sell-off. When we were here, I was telling the people in my Discord, I love this company under $15 a share, and I really like them under 17 a share. And that still stands as of right now. I will most certainly buy more in this company if we dip somewhere between 15 and 17. For me, I already have a position I'm quite happy with, so it'll more than likely be closer to the $15 mark for me personally to buy, but I like them anywhere under 17. Again, long-term hold for me more than likely. This is a company where I think next year is going to tell us a lot though. Richard Branson could potentially be going to space as early as next year. And when I say next year, I mean the first quarter of next year. And if that is to happen, then the everyday person will be brought to space as of probably the second half of next year. If that happens, you know, this is definitely going to be a long-term hold for me. If that doesn't happen and things get pushed back further and further, I'll have to play it a little bit more reactively, but I do still see this being a company I hold for 10 plus years. Risk factor, in the short term, very high. I mean, these guys have traditionally been pushing back projects further and further. Richard Branson should have already been in space off of initial timelines. If he does not go to space within the first half of next year, I would put the short term risk very high. Probably 6, 7, 8 out of 10. If he does go to space the first half of next year, I'm probably going to bring that back down to a 4 or 5 more than likely. Okay, and then we have just one more company, and that's Apple. Debatably my favorite big tech stock. I always say on this channel I love Apple, Facebook and Amazon from a long-term perspective. 6-month chart, we went on this absolutely beautiful run up, okay? And then the 6-month chart in general, it's been amazing, okay? So all of this is pre-split numbers, but from the tops, we're still down 15%. We went down 20% in the space of just over 2 weeks, which for a company like Apple is huge. We all know who Apple are. I love them for so many reasons. I'm just going to give you the details. Long-term hold for me. Very, very long-term hold. At least 10 plus years. Risk factor, extremely low. I'm probably calling Apple a 1 or a 2 if you're willing to hold these guys for 10 plus years. The odds of you not making lots of money, in my opinion, in that time frame is so low. Where would I be happy to buy? I mean, I wouldn't be too upset buying at these prices, but if we could, you know, approach 105 again, I most certainly would more than likely buy some more. But again, when we have those kind of time frames, 10 plus years, who really cares all that much what happens in the short term? But anyway, my friends, there is 10 of the stocks I am watching very closely, most of which I own, all of which nearly I'm green in, that I am contemplating buying more in right now. I feel like that was probably a pretty long video, so if you did watch all the way until the end, congratulations to you, my friend. You are a true legend. I really do appreciate you being here. Your support means the world to me, especially watching until the end of a video that's this long. You're a legend, my friend, so thank you. If you did enjoy and maybe you took some value and entertainment, please do consider hitting that like button, drop me a comment and subscribing. All of that means the world to me. It genuinely does help me out so much. And it's all free and takes like 3 seconds. If you're interested in finding out every single time I buy or sell a company or what new companies I'm watching, hit that first link in the description and sign up to my Patreon member. You'll get full access to my private Discord where you don't only get my buy and sell alerts, you get to join a community of over 400 investors. We speak about stocks all day long and there's so much useful information there. It's insane, baby. But anyway, my friends, thank you so much for watching. I hope you all have an absolutely fantastic day. I will see you for another video very soon. Peace.